Hey traders, Mike Zer here. Welcome to my weekly Trader Psychology live stream series where I help you with the trader mindset, the mental challenges that you may face on a day-to-day basis whenever you're trading. Today we had originally scheduled a one-on-one session with one of my students. Unfortunately, my student is not able to make it, but today in today's live stream, what we're going to talk about is the most common trading questions that I get from my students. And essentially, these are the type of questions that uh, many students of mine, many of my YouTube subscribers, essentially people who come up to me and ask me these trading related questions. So what I'm going to do today is essentially share with you what are these most common trading questions and tell you what they are, and I will give you the answer to them. So some of them do involve trader psychology, but a lot of them are related to more of the technical side of trading or trading related instead of the mental mindset. But I'll go through them today with you, and if you guys have any questions or any trading questions, please type them in the question box below. All right, so let's get started. So again, just a quick disclaimer that anything that I say is basically for entertainment purposes only. Please contact your financial advisor before making investment decisions. All right, so let's get started here. All right, so these are eight of the most common type of trader questions that I get. Obviously, there are going to be a lot more, but what I thought we'll do here is let me go through these eight questions and give you an answer to them. And if you have guys any questions for me, please again type them in the question box. All right. First question that I always get is how much money can I make from trading? Well, the answer is there is no limit, right? As all of you know, is that you could, there's no limit to how much you can make, right? It just depends on whether the market is going your direction, whether the trading instrument or the financial asset that you bought or shorted goes in a certain direction, whether you are playing with leverage, depending on the size. There's a lot of factors, right? So the answer is there's no limit, and that's also one of the reasons why many people get into trading is because there is essentially no limit to how much they can make versus a job where you are given a salary and or if you are paid per project or you're paid per hour, there is a set amount that you can make. Mind you, you can get raises, you can get bonuses, but there is essentially a limit, right, to how much you can make as an employee or has a contract worker. Obviously, the situation, the challenge is there is uncertainty. And that's kind of what I'll talk a little bit about. And this is kind of what I share to a lot of my students is that you won't, until you get some consistency, and even if you do get some consistency, there is no consistent or no set amount that you'll make on a daily, weekly, monthly, or even yearly basis. The reason is obviously you don't know when a certain trade is going to work in your favor, right? You could be losing, trades on a daily basis, monthly, or, you might have a bad year. So that's where the uncertainty lies. And the psychological aspect of this is some people just can't hack the fact that they need a stable income, right? Or they need a stable income source coming in. So when you approach trading, essentially what I would suggest for you is in the beginning, make sure that you if you you have a consistent monthly income that takes care of your bills, make sure that when you are trading with risk capital, meaning if you lose all your risk capital, then it's not going to affect how you trade or affect your financial situation. And the third thing is when you do start making some profits from the markets, expect to make profits in chunks. Okay, what I mean by chunks is you could, let's just say, one day make the profits equivalent to a month's salary, or in some scenarios, a few months or a year, right? So, but it's not consistent, meaning that every day you're going to make, let's just say, $500 or 1,000 or whatever amount per month. So the mental side is don't expect consistency in terms of your income, but look for consistency overall over a longer period of time. And when I say longer period of time, maybe look at it if you have a goal of making, for example, I'll just make this up, $10,000 every 3 months, for example, like 3,000. Don't look for it. Don't look to make 3,000 every month, but look for the whole amount to be made in 3 months rather than a month, and that will help you a lot because when I was trading, I had some successes, and I said, "Oh, wow, I'm going to be making, let's just say $5,000 a day, or or I'm going to be making $5,000 a month, etc., etc." But in reality, there's some months that I don't. But overall, you do. If you are consistent in your trading, you'll be able to achieve that over 3 months or over a year. So psychologically, don't expect consistent income. Second, what should I trade? Well, there is so many things that you can trade, right? There is stocks, there is futures, there is indices, there's commodities, there's currencies, there's cryptocurrencies, there's trading options. I mean, there's so many different asset classes that you can trade. And people say, well, what's the best one? Or what should I trade in your opinion, Mike? Well, it depends, because if you are trading, let's just say a day trader, and let's just say you have a full-time job, then there's certain restrictions on what you can trade. Some people are able to trade the currency market, which trades 24 hours, and they would trade, let's just say if they're working during the North American session, they would trade the Asian sessions after they get home, or they would trade the early morning sessions in the European markets. Same thing with cryptocurrencies, they move 24/7. Now, if you are someone who likes to do research, then you may want to focus on individual companies, right? Because individual companies, you need to know what's going on. But for those people who don't, trade the index, because the index is representative of the entire market. So you don't have to do a lot of research on individual companies, but rather on the overall economy or what is happening in that country's financial markets. So there's many things, and there's things where if you are trading stocks, you don't get as much leverage versus, let's just say, trading currencies. There are scenarios where you want to trade something that is less volatile versus something perhaps more volatile if you are day trading. So there's many aspects, right? There's many things that you can trade, and you just have to find it out for yourself. Like, find out something that you can get good at. Like, I've got guys who just focus on cryptocurrencies, right? It's a lot more riskier asset, but you are able to make a lot of money, especially because of the volatility, versus someone who I work with that is looking for something stable, something generate a consistent yield. Then they would trade stocks who pay a dividend or pay a yield on a monthly or quarterly basis, right? So that's kind of what I suggest is find out something that you want to focus on rather than trying to find out, okay, well, what's the best performing asset that I can trade, and I'll just trade that. Well, it's not necessarily like that, because by the time that you find out it's the most or the best performing asset, it's probably too late for you, right? Okay, third thing, how to predict the market, right? What are the things that I can use or I can look for that can forecast or predict what the market is going to do? Well, first of all, as you know, we cannot predict the market. We can just utilize the tools that we have to be able to utilize past historical data to forecast future price movements, and that's what is called technical analysis. So if you have the mindset that you are trying to speculate and predict the direction of the market, there's nothing wrong with that. The reality is, I always tell this, traders, the real professional traders, they don't speculate. And what I mean by that, they don't bet whether the market's going to go up or go down. And you say, well, what do you mean by that? Well, we don't know what the future of the market, so obviously we are betting whether the market's going to go up or it's going to go down, or any asset, right? What I mean by that is, as traders, we look at past historical data and then we try to forecast what it's going to do in the future. So if we see that the historical data is indicating that the market is going up, or currently the market is going up, we buy. If the market data is telling us, hey, the amount of sellers or the amount of buyers is slowing down and the sellers are starting to gain control, that's signaling to us that we may switch our focus from being buyers to sellers. So traders, or trading is not about speculating. It's not about, for example, you buying a financial asset ahead of some type of news, unless you know what the news is. Because if you don't know what the news is, you are basically speculating. Versus traders who, based on the market, based on what the news is telling them, then they will trade accordingly. Okay, so keep that in mind. Okay, this is why professional traders or really good traders, we don't speculate. Mind you, we can, but generally we trade what the market tells us. If the market says, hey, it's going up, and we have a mindset that's going down, then we buy. We don't short. If the market's going down and we're trying to buy, well, we wait until the market has reversed, then we buy. Okay, so that's the difference, and I hope that has helped a lot of my students focus on not trying to be a speculator, basically gambling. And this is why a lot of people think that trading is gambling. It's not. We are basically trading what the market is telling us. Okay, fourth thing. And again, if you guys have any questions, please type in the question box. The fourth thing, what is the best trading strategy? Okay, first of all, there is no one best trading strategy. Okay, or there's no best or the worst trading strategy out there. Because a strategy is a good strategy if the strategy aligns with what the market is telling us. So let me give you an example. You have a strategy that is good where it gets to the market is going up. Okay, it's a bullish strategy, for example. But and in bull markets, okay, in strong upward markets, it's a great strategy, right? Because the strategy looks for an opportunity where the price keeps going up very, very strongly in one direction. Okay, or it's a trending strategy. Okay, but when the market changes, okay, you say, and this strategy doesn't work anymore, then this strategy doesn't work out. It's not the best strategy anymore. So the best strategy is the strategy that you can find that fits the current existing market. So, for example, if a strategy is based on volatility, okay, based on it being up and down, and the market is going sideways, hey, it works. But if suddenly the strategy that you try and use is a trending strategy where it's trending up or trending down, then you're going to lose money, right? Or the strategy is not going to work. So the answer, what's the best strategy? Find out what the current market is doing. Is it a trending market? Is it a downward market? Is it a choppy market? Is it extremely volatile market? Then find out and test what strategy fits that type of market, and then you test it, and if it's working, then that's the best strategy for you. All right, next one. What trading tool or tools do I use? And kind of share this with you is throughout my 23rd, 24th year trading, I've learned so many trading tools, right? Or technical indicators or strategies or, exposure to different website tools, analyzing data, algorithms, automated trading systems. I've tried a lot, okay? And I'm sure there's even more things that I haven't tried or the tools that I haven't tried. And specifically, I remember when I was still in my first few years of trading, I tried to learn every single technical indicator out there, right? The volume, the oscillators, the RSIs, the MACDs, the Ichimoku clouds, lots of candlesticks, lots of different types of technical tools out there. And because I thought, okay, if I learn all the tools and all the tools basically will tell me whether I should buy or whether I should sell, give me a lot of analysis, right? But what I found out is actually less is more. What I found out is that all these technical indicators I tried, they all started giving me different types of data. And it would make me become an analysis paralysis type of way of thinking. Is there's so much information. All these indicators are telling me certain different things because obviously they measure different things. So what I try to do is wait for all the technical indicators to line up, then I will make a decision. But by the time that all the technical indicators line up, the trade has already gone in my favor. So I missed it. So nowadays, when you ask me, well, what technical tool or trading tool do I use? Well, it all boils down to, well, what is it that you're trading? What type of time frame? Are you based more on looking for trends? Are you a fundamental trader? Are you looking for utilizing certain strategies? For example, playing some earning strategy. What is it that you are focusing on? Then that will determine what type of trading tool that you would use. So, there's obviously so many different examples, but for example, let's just say you are playing earnings, company earnings. So obviously the tools that you need to use is, I need to find out how the companies that have been focusing on how they performed, right? So, I suggest, going to certain websites to look at the earnings history and then utilize the data there to see how the stock has performed prior to earnings, et cetera, right? So, and then utilizing certain technical tools to help you define, when is the stock price going to go up prior to earnings. So it could just be using moving averages. It could be just using trend lines, support resistance, that type of thing. So it depends, right? You don't necessarily. So the answer that I'm trying to indicate to you guys is you don't necessarily need to learn all the tools, but just know what the type of strategy, the type of style that you're trading, then you know what type of technical tools that you need to use. Okay, next 3 questions. I'm going to go through a little bit quickly. Again, any questions that you guys have, please type in the question box. Next one is how to analyze the market. So again, similar to line to what I said earlier is, are you a technical trader? Are you purely technicals, meaning only looking at the charts? Are you analyzing a company based on valuations, the fundamentals? Are you trading a certain asset based on other economic factors? Are you trading something based on a mix of both fundamentals and technicals? If that's the case, then there's many ways to analyze the market, right? Obviously, the most clear way is you just look at the charts. And some people say, well, you don't need to look at news, don't need to look at the fundamentals because everything is priced into the market. I disagree. If you just look purely based on technicals and looking at the charts, you're missing out on the catalyst, or you're missing out on the bigger picture of what's going on in the asset that you're trading. So what I would say to you is how to analyze the market. You look at both technicals, you look at fundamentals, and also you look at what we call intermarket analysis to see how other markets are doing that could impact the financial market or financial asset that you are trading. Next thing, what time to trade? The best time to trade is when you are the most available. I always say to traders, do not try to adjust your lifestyle to the market. And I'll give you a perfect example. We here on the Pacific Standard Time on the West Coast here in Canada, if you are trading the US and Canadian markets, the markets open up at 6:30 a.m. So I usually head to the office or head to my computer 5 a.m., right? At least an hour, hour and a half, and do my preparation. When I was training traders in my office, I would get them to come in at 5 a.m. and watch me how I trade. I would tell you some of these traders are not morning people and they have a Starbucks or coffee in their hand and they're not looking their best. So how do you expect you to perform great when you are not even awake? Some people are day people or morning people. Some people are night people. So some of them are very productive in the evening. So they trade whatever markets are in the evening, or some people are morning people and they are most effective in the morning. Or some people who have full-time jobs are quite busy, they do their own research when they have time and then they just set the orders no matter, it doesn't matter what the market is doing or not. So what time to trade? What's the best time to trade? The best time to trade is when you are at your peak performance. All right, last question is, I don't get this as much often, is how to manage risk. Well, again, if you've been following me for quite a while, you know that risk is my number one priority in trading. So how to manage risk? Well, as I said to you, and I'm not going to dwell too much on this because you can watch my other videos where I talk about risk. The most important is you got to know what you are risking or how much you will potentially lose if a trade does not go in your favor. If you are not comfortable losing that amount on the trade, then do not enter in or reduce the amount of shares that you're buying and reduce it to an amount that you're comfortable risking if the trade does not go in your favor. All right, so I'm going to end this here. Again, if you guys have any questions, please type in the question box. Just wanted to look at the question box here. Brian says, "Good morning from Los Angeles, Mike." Okay, good morning to you. Boss Nova, hello, greetings from Bulgaria. Okay, greetings. Brian says, "Don't focus on the money. Focus on executing your plan." Of course, yes, and that's again something that I talked about is I think I talked about it in a previous live stream. Is when we focus on the money, we are influenced by the money. We were, let's just say, planning to make $1,000 on this trade. If the trade worked out in our favor, we see a profit right now on our trade of $500, and you say to yourself, $500 would be great, but I was looking for 1,000. But you know what? I think the market may not go higher or may not go in my favor. So maybe I'll just take that $500 right now, and you hit sell or you exit the trade, and then the trade performs accordingly to what you had suggested, and you essentially made $500 less profit, right? Or you say to yourself, you see that you are only looking to risk, let's just say $100 on this trade, and suddenly you see $100 loss, and you say to yourself, you know what, I can probably afford to lose more than that. So you break your rules, and then you're now suddenly down $200, and you say, you know what, I can't sell now because originally I'm only going to sell once it's $100, and then suddenly you get $500 and then 1,000, and then you screw up your mental mindset just because you're focusing purely on the profit and loss and not the trade. All right, very, very good. Joel says, how do you feel about trading on the OTC market? So OTC market stands for over the counter, and specifically it's stocks that are not what we call blue chip. They are essentially what we call a little bit riskier type of companies that are listed on the OTC market. The OTC market does have legitimate companies. Not saying that they don't, but they tend to be a little bit smaller, small to medium-sized companies. So I have no problem with trading those markets. Again, it's the same thing in terms of what you're trading. You got to know what you are buying or selling, and understand that if you are trading those type of markets, you are trading a little bit more volatile markets, and maybe the volatile markets fit your approach, or fit your strategy, or if you're looking for much more riskier, then perhaps you're looking for much higher returns. So nothing wrong with trading the OTC markets. Richard asks, how do you handle spreads and commissions? Okay, so the spread is basically the difference between what you are buying at, which is the ask price, and what you're selling at, which is the bid price. So generally, obviously, you want to buy specifically a financial asset which has tight spreads, because if you enter into a trade right away, you hit the ask. But let's just say, for example, suddenly the trade reverses against you and you want to get out. Well, if the higher the spread, the immediate or bigger loss that you will incur. So that's one thing. Number two is, if you want to trade in a very liquid asset, okay, easily get in and out of without not getting good prices, then you want to trade tighter spreads. So in general, obviously, I like to trade tighter spreads. However, there are scenarios where I do like to trade the specific asset that is a little bit higher spread than normal. Then what I do is I don't hit the ask. I just basically place a limit order on the bid, especially if I'm buying, so that the price comes to me. And then if the price comes to me, then great. If the price doesn't, then that's okay with me as well, right? Then I won't get hit on that trade. So that's how I would look at spreads. The other thing in terms of commissions, when I was day trading before, 300 trades per day, scalping, obviously commissions do take a big chunk of my profits. But if you're not trading that actively, commissions should not impact your trading decisions. Mind you, broker would love for you to be, trading actively because they generate more commissions from you. But in general, the amount of commissions that you incur should not impact your trading decisions. And that's why sometimes, traders ask me, well, what's the broker that has the lowest amount of commissions? And perhaps some of the brokers out there nowadays have low or zero commissions. And you think, hey, that's great. But sometimes you ask yourself, well, how do they make money? Well, a lot of times they make money through your providing order flow, right, for the markets. So that's kind of how they get paid, or through other aspects, or perhaps not as great of a software or execution. So I always say is you want to not look at commissions and the spread as a purely primary guider of what broker you should use, but the reliability. And as you can see with the FTX situation is you want to go with a trustworthy broker, and perhaps a broker that's being regulated so that your funds are safe. All right, last question. Yes, from Joel is, what do you trade mostly? Common stock, options, ETFs? So I trade a wide variety of instruments depending on the type of trading account and depending on the type of objective. I do trade a lot of stocks. I do trade options, futures. I used to trade quite a lot of crypto, especially in the past couple of years. I've kind of slowed down that, but I'm looking at those as more of a longer term focus. I trade CFDs, I trade Forex. So I've been exposed to many different asset classes. And again, the same question that I always get is, well, what should I trade? Well, what you should trade is what you feel comfortable with and what you want to achieve. All right, so I'm going to end this off. And basically, as I indicated last week, is I'm going to offer a free one-on-one session to one student or to one of you guys who's on this live stream or watching this live stream. Email me at contact@mikesir.com. Okay, I will select one person to help, and we'll do it on a live stream here. I'm going to help you guys any mental challenges that you face, specifically anything that you can't get over. And by you sharing your experiences, perhaps some of the people who are watching this live stream can benefit from your challenges as well. So email me, write down in that email a very, very detailed explanation of what challenges that you're facing, and I will pick one person that probably would have similar type of challenges, and I will do that next week on our live stream. All right, I'll just answer one more. Aman says, what's your risk reward ratio and how many trades in a day? So generally minimum, you gotta look for at least 2 to 1. If not, depending on the objective for that account, I try to look for 3 to 5 to 1, so that if I get 4 losing trades in a row, the 5th one will make up for it, right? Especially on the 5 to 1. So look for bigger risk reward. Generally nowadays, I don't trade that much. Probably, again, it really depends. If it's a quite a volatile, active market, and let's just say I'm looking to put on some day trades, I may trade up to 3 to 5 round trips. All right, guys, thank you so much for joining me on this Sunday, and look forward to seeing you guys next week. Take care, everyone.